So, Mr. Narasimhan, the first quarter was marked by a significant impact from generics. Did the market underestimate the pressure?
When we look at the year, we had always guided to the first half of the year having significant generic pressures and there being a slowdown in the business. We think the markets might have underestimated the impact. It was very much in line with our forecast, and we have full confidence that in the second half of the year, we'll return to growth. We're maintaining our full year guidance, and most importantly, feel very confident in our 5 to 6% 5-year growth outlook.
You expect growth to return from the second half of the year. What gives you the confidence that new products can truly offset the losses caused by generics?
The most important thing for us is to look at the growth drivers. I mean, if the generics go faster or slower, it really doesn't impact the long-term outlook for Novartis. Our growth drivers grew 37% on the quarter, and some of the brands have performed extremely well. Kisqali was up over 50%. Pluvicto, Semblix, and Rhapsido all performed extremely well as well. And then Leqvio really returned to very strong growth. So those are the medicines that will have patent protected into the 2030s and will really support the long-term outlook for Novartis.
Okay. You're anticipating several key study results for the second half of the year. Which project do you believe has the greatest potential to transform your growth in the long term?
Most important project to us would be remibrutinib. I mean, remibrutinib is a medicine we think could be one of our largest medicines in history, has a pipeline and a pill potential, already approved in one skin disease indication, chronic spontaneous urticaria, has positive results in chronic inducible urticaria, and will have readouts in multiple sclerosis and another skin disease, hidradenitis suppurativa, later this year. So that would give us a total of 4 indications for this medicine, which we think really could propel this medicine to become one of our biggest growth drivers into the future.
You have suggested that international price differences are increasingly influencing the US market. Will it even be possible for pharmaceutical companies to enforce regionally different prices in the future?
I think we are going to have to come up with creative solutions. Yes, in theory, we could. I mean, every one of our prices for our medicines are set at the individual country level, so not at the European level. So we can come up with different agreements with different countries. But we are in I think, an urgent situation now to try to get policymakers to understand that if we don't find a solution for MFN, we will be in a situation where drug launches are delayed even further. Right now, we know in Europe, 60% of medicines have delays of some kind. 30 to 40% of medicines sometimes don't even come to market across the industry. And we don't want that situation to get worse. So I think hopefully governments now will move more quickly. The early signs are positive engagement, but not enough action. And I hope there's more action in the years to come.